All right, here we go for Wednesday. Yesterday was another day of no trading. It was almost a carbon copy of Monday, where the move was to be in London session or that Asia low, and then the expansion happened throughout the rest of the day. But you could only have really caught the move if you were trading London session. And today it seems that London session was the time to be trading again. We've manipulated above Asia high, and now we are coming down quite fast. And so London session really was the play this week so far. However, today we do have some major FOMC news in the evening, and a lot of the time that can cause quite choppy New York AM sessions, and then the PM session is a little bit crazy, and then Thursday and Friday could be some decent trading days. But starting off on Nasdaq on the daily time frame, I've marked out two buy side liquidity points because, as you can see, we're in discount of the overall range. If I draw in from that November low all the way up to this blue line at the top here, if my mouse will stop lagging, there we go. We are in discount still, or just about in discount still. And then if you want to draw in this last daily impulsive leg here, again, if the mouse doesn't want to be too laggy, otherwise this might be painful. We'll just draw in. I definitely need to get a new computer, that's for sure. Yeah, there we go. We can see that we are on about the 0.5 level, and we have these liquidity highs just into the premium, and we have a lot of these daily highs just all kind of gathered together. This higher one here from the 25th of February, I'm not 100% sure we're going to take it out, but it seems logical that at least these March highs are going to get taken out because they're all grouped together, and maybe we take out these highs, and that's the internal liquidity grab, and then it goes lower. I'm not sure, but that's kind of what my thinking is about where price is heading. If you go into the 1 hour chart again, we've had a very expansive Monday and Tuesday, very much bullish momentum. So I'm going to be looking for continuation now of that long, especially as we have come underneath Asia low, London low, and we're coming right back down here. 1 standard deviation, nearly 2 standard deviations. So my plan for today will be, I want to see a run on these lows over here. And then if we get a bullish swing failure pattern, then I'll drop into the 5 minute and look for an entry model, whether that be a fair value gap, order block, inverse fair value gap, or whatever. That is my plan. Look for a liquidation and a rejection of these lows. On ES, pretty much in sync as well. Have those lows drawn out, and it looks like ES could possibly hit them before NQ, and maybe we even get an SMT, which would be a really nice bullish confluence as well. Looking at, I think worst case scenario is we get to this fair value gap here and then reject that, and then we take out no liquidity. But as it looks like this fair value gap, which we're currently situated in, isn't proving to be too much support for price right now. Now, I am aware as well that because of how expansive the last 2 days have been, you do want to make sure we get confirmation with these liquidity lows. Don't want to be entering straight on them, because what could happen is we could just run straight through the liquidity lows, because we do have quite a lot of different liquidity lows beneath us that price may be looking to take out, and fair value gaps it may be looking to fill. So I'd be definitely wanting to make sure we get some good confirmation that these lows over here are going to be fueling a reversal. So if we get a very strong, well, it doesn't have to be very strong, but if we get a good candle closure after the open, so that will be the 1 p.m. candle, if that closes with through these lows, or the 2 p.m. candle through these lows with displacement afterwards, and then we can find a 5 minute entry model, that will be my trade. If it's a weak displacement or we just close beneath the lows, then I'll be ignoring these and either looking for the next candle to come back into the range, or you'd be looking for any more liquidity beneath us. So that's my trade idea today, is look for these longs off of these lows and then target the highs that I've drawn out. I've drawn out just some intraday highs from London, and then we do have these daily highs as well, which we can use as liquidity. So that's my plan. Look for those lows, get a rejection of it, and then get into a move up to the upside. And hopefully we can actually get a trade today, and it'll be the first trade of the week.